What's up, guys? How are you guys doing today? Are we live already? I think we are, right? Let me see. Peter B is already watching the stream. Let me see. There you go. We are live. What's up, guys? How are you? How was your day? Joshua Lockhart. Yes, sir. Okay. Yeah. Everything is good with my sound. Welcome back to another live stream. How was you guys' trading session today? What a roller coaster ride, huh? Unbelievable, guys. Check this out, huh? An absolute roller coaster. Take a look at today's trading session, huh? So, we had an absolute roller coaster, courtesy of Mr. Jerome Powell. And wow, take a look. We went higher as soon as Mr. Powell started his interview. Then we dropped like a rock. The bulls found support at $407.57. This is for the most part the same lower support that they held yesterday, right? Yeah, pretty much the same support. This area at around $408 is going to be a critical support, a very tough spot for sure for the Bears. Well, the bulls managed to held a support yesterday's lower pivot, and then we saw a massive rally into the closing bell. We had a meltdown operation and then a melt-up operation, and the markets simply don't care about the Federal Reserve, guys. This is the Fed is bluffing rally. Powell didn't say anything new today. For the most part, he stated the same. He said the same stuff that he said last Wednesday. So he kept on talking about a disinflationary process that already began in the U.S. And he also said that financial conditions remain tightened. The only new thing that was said by Powell today, I actually have a screenshot over here by Nick Timiraos. This is a tweet by Nick Timiraos. This is the only new stuff that Powell put on the table. So he said, we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than has been priced in. If we take a look at the Fed futures, they didn't do much today. The markets are still pricing in a pivot. The infamous pivot is being priced in as of now for the December meeting, this December 13. So according to the markets, the Fed is bluffing, and maybe the markets are getting this one right, because the Fed hasn't been, let's say, strong enough with the message that they are delivering to the markets. And the bulls, the markets believe very firmly, and we can confirm that, taking a look at the Fed futures, that the Fed is bluffing and that they are going to pivot in December. We'll see what happens, because Powell reiterated as well today that they aren't going to make any pivot throughout 2023. But the bulls say, no, bro, you don't know what you're doing. You're going to pivot, and I am getting this one right, and I am going to get away with it, and I am going to keep on buying dips. So we simply need to trade the shorts that are in front of us. And as of now, the trend is up, guys. Absolutely. Drew Bider, hello, bro. Karen Brody, hello, how are you? Stephen Wisdom, CH, Shanna Mohammed, hello. And Joshua Lockhart. If you guys want me to go over any given stock, please let me know. I guess that you guys want me to take a look at Tesla, the hottest stock by far as of now. Ravinder Garg, all things Resi. Today was a good day. SPY, hashtag Apple. What do you guys believe? That this rally is going to keep on going? We had a very solid, despite the fact that we rode a roller coaster today. We had a green day across the board. Russell 2000 went up today 0.76%. NASDAQ went up 1.90%. Dow Jones went up 0.78%. And the S&P 500 went up 1.29%. Crude oil, I saw that's, I think that I saw some of you guys interested in taking a trade with USO, the United States Oil Fund. That's a chart that doesn't look that well, but that I am maybe interested in trading in the upcoming trading sessions because crude oil has been going higher. The Dixie went lower today, I think, right? At the end of the day, it went up this morning, and it ended up closing in the red. It went down 0.26%, and we have over here some sort of warning that we need to keep a close attention to. The 10-year Treasury yield went up today 1.10%. Let me take a look at TNX. I think that TNX has been recovering in a substantial way. Let me see. Yeah, this is not a good sign for the bulls, guys. You guys know that the 10-year Treasury yield is inversely correlated to tech stocks, growth-oriented stocks, and higher multiple stocks. So the 10-year Treasury yield maybe bottomed out at 3.33%. It has gone up 10%, almost 11% in a matter of 4 trading sessions. This is not a good sign for the bulls. You guys know that yields are, for the most part, a leading indicator when it comes to whatever the Fed is going to do about interest rates. So this is some sort of question mark that we have as of now on the table, because if we take a look at the sectors of the markets, the rally was led today by energy because oil went higher today. However, the second best performing sector today was technology. We had a massive rally today, guys, led by Google, Microsoft, Apple. So we have this AI optimism. Let's just put it that way. I think that actually Microsoft was going to announce something today about artificial intelligence, and this phenomenon of ChatGPT is all over the place. And we have stocks such as C3AI, which went up, I don't know, or has gone up year to date, something like 200%. So we could say that today we had an artificial intelligence optimism. So this is by far, guys, in market cap terms, this is the most important sector of the market. So ended up the tech sector ended up going up today 2.50%. And take a look at energy. What is going to happen with inflation if oil keeps on going higher? If the Dixie, the US dollar, keeps on dropping? Well, we will see what happens in the upcoming trading sessions. So, Lina Marie, hi, how are you? Can you take a look at Lululemon? Sure, absolutely. Let me go ahead and take a look at Lululemon. By the way, guys, let me go over the SPY and let me tell you guys what I am thinking about over here. The trend is up. We can see the SPY trading above the 200-day moving average, 100-day moving average. So obviously, guys, the big spot for the bulls is going to be 418 bucks. They are getting closer. They are only $3 away. We can make the case that if the bulls happen to pay a visit to 418 bucks tomorrow, we might be seeing over here a double top, which could put pressure to the downside. The RSI of the SPY is at 62 points. We can make the case that it looks healthy as of now. This is a clear uptrend, and the SPY is consolidating above the 200-day moving average, which is still declining. A bull would like to see the 200-day moving average starting to rise a bit. So nothing crazy. I am not going to make a federal case out of it. And so far, guys, throughout this year, the strategy that has been working out the most is buying dips. So we can make the case that any drop down to 408 bucks, which acted as support yesterday and today as well, might be a buy the dip opportunity. The only thing from a mechanical standpoint that I am kind of concerned about is the 10-year Treasury yield, which is going higher. And that is not a good sign, as I just told you guys, for tech-oriented stocks, higher multiple stocks, and growth stocks, which have been the stocks that have led the rally so far. So that's a That's a question mark that we have over there on the table from a mechanical standpoint. If the bulls happen to take out for 118 bucks, what do you know, guys? Maybe what would be the final destination for 130 bucks? Who knows? The bulls are in shorts, guys, and the shorts are telling us to buy dips rather than selling rips. Also, you can give insight on Coinbase. Absolutely. Nicolás Esteves. Hello, Nicolás from the Dominican Republic. What's up, bro? So you speak Spanish, which is my first language. Okay, Lululemon. Let me go ahead and take a look at Lululemon. I also want to go over the market structure of the stocks that you guys are telling me to go over. During this live stream, wow, Lulu went up today 2.50% and it closed the trading session at $319.10. So the bulls as of now are dealing with a very important resistance with this 100-day moving average at $324. So this is going to be a pivotal spot for Lululemon if the bulls are able to take out this semi-descending 100-day moving average at $324. That is going to be a good sign. That might be a sign that they are gathering momentum in order to make another push higher and maybe being able to fill the next important gap up to 338 bucks, which happens to be a previous resistance back from late October. So 324 bucks, very important spot. If the bulls failed at that level, that might be a short opportunity. And if they take it out, that's it. And obviously, if they take it out with the indices going higher, then we might be about to see $340 anytime soon, or sooner rather than later. I recently lost some bucks on Lululemon puts. I actually posted that trade in my channel. So this is not a stock that I want to be talking about today. Okay, RSI 57 points. We can make the case that Lulu isn't neither overbought nor oversold. And let me take a look at the market structure of Lululemon. What is going on between buyers and sellers? Supply and demand. Let me take a look. What is the market structure of Lululemon looking like? We have a descending demand and we have an ascending supply that is actually above the average. So this is not a very good looking chart when it comes to market structure. So I'm thinking, and from a market structure standpoint, that 324 bucks is going to be a very tough spot for the bulls, most likely, unless we see another super melt-up operation, carried out by the bulls. If that were the case, yeah, maybe this 100-day moving average could be taken out. Well, I truly appreciate you, Alvaro. Absolutely. Same feelings for you, Lina Marie. If you have any other suggestion, please let me know. Coinbase. I haven't taken a look at Coinbase. This stock has been going, I haven't taken a look at Coinbase throughout this week. This stock has been going on an absolute tear. Check this out, guys. In January or year to date, Coinbase has gone up 112%. My goodness. And obviously, mainly because also Bitcoin has been going on an absolute tear. Is the top in here? Because the bulls failed at 88 bucks, and since February 3rd, Coinbase has dropped 23%. So we have seen, we saw profit taken, which was expectable given the super rally that we saw throughout January. And now we have a very important support coming up for the bulls of Coinbase if this test happens to be made. Or if this area happens to be tested, 64 bucks, which happens to coincide with this declining 200-day moving average. Very important spot for the bulls of Coinbase. If they lose this support, we might see a gap down to the 100-day moving average at $54. So this is going to be a critical spot. Put this down on a sticky note, guys. This is not a very good looking chart, even though Coinbase is trading as of now above the 100-day moving average and the 200-day moving average, but the push to the upside that we saw throughout January looks very overextended to my eyes. So let's see if the bulls can hold 63 bucks. If that were the case, we could see a bounce back up to 78 bucks, which happens to be a previous resistance back from late October and also back from early October. Very important spot over here at around $64. The RSI is at 52 points, so we can also say when it comes to Coinbase that the stock of this company is neither oversold nor overbought. And let me take a look at the market structure of Coinbase. And obviously, guys, whenever I am trading these kind of stocks that are Bitcoin related, like Marathon Digital and I don't know, Coinbase, I always keep a close watch on Bitcoin. If Bitcoin is dropping, then it's not a good moment in order to go long. And if Bitcoin is going higher, then on the other hand, that's a good sign in order to go long with these kind of crypto-related stocks. In the case of the market structure of Coinbase, this is a very good market structure. Take a look, guys, over here on top. You guys can see the demand, which is rising and way above the supply, which happens to be on the bottom. So we have a demand that is way above the supply. So this is a good looking market structure chart for Coinbase. I would say, again, from a market structure standpoint, buyers and sellers, supply and demand, from a supply and demand standpoint, that this 200-day moving average is going to be a tough spot for the bears at around $64. Can you go over Google? Yeah, we have the artificial intelligence optimism. Do you guys like any of these artificial intelligence stocks, such as C3AI and UiPath, Palantir? Is any of you guys interested in investing in any of those stocks? Meta, absolutely. Let's go over all of the stocks that you guys want. Okay, Google went on an absolute tear today, 4.42% up. 4.42%. I think that they announced something artificial intelligence related. Don't quote me on that, but I think that's the case. Let me take a look at the live news tab. Google, Microsoft is coming for sure. Let me see. I've never this liberated in terms of opportunity. I don't see any news over here. But I think that they did announce something about artificial intelligence. Now we have the artificial intelligence optimism. So all of these stocks have been going on an absolute tear. Okay, in the case of Google, the bulls are trading above the declining 200-day moving average. We would like to see, or the bulls would rather seeing the 200-day moving average at least semi-ascending, which isn't the case quite yet. But they are trading above the 100-day moving average, 200-day moving average. So watch out for a process of consolidation slightly above $106. $106 is a previous support back from early September. This is also a previous support back from late June. If the bulls start to consolidate over here, this could be a sign that they are gathering momentum in order to fill the next important gap up to $113, previous resistance back from early September. The RSI is at 67 points. I'm not going to make a federal case out of it. It could be a bit lower, but from a RSI standpoint, the stock of this company can definitely keep on going higher. And let me take a look at the market structure of Google. This is a very useful tool that I use, guys. Market Structure Edge. I need to pay $100 per month for this tool, but this is it's been very helpful for me in order to determine if I am actually going to take any given trade. Okay, so the market structure of Google. We have an ascending supply that is above the average. Take a look where you see this dotted line. This is the average. So the supply is rising. It is above average. And it is about to match the demand. So that makes me believe that we have a bunch of market participants holding winning positions over here, so we might see some sort of profit taken. So if Google happens to take out this support at $106 on good volume, let's say on good volume and momentum for the bears, then we could see the stock of this company going down to $102. $102 is a previous resistance back from early December, and this is also a previous resistance back from early October, and also, by the way, a previous support back from mid-May. So this is going to be a pivotal spot for Google, $106 over here. I'm in Palantir, Joshua Lockhart says. It is an expensive stock. I mean, I don't know if you are taking a trade, but if you are planning on investing on Palantir for the long term, I took a look, guys, at the valuations. I like valuations. I am a trader, but I also like valuations. That is something that is a difference that I have when it comes to most of my colleagues, my traders, colleagues, let's just put it that way. So all of these artificial intelligence companies are very expensive. And in the case of Palantir, or let's say that Palantir is not an exception to the rule, very expensive stock. Be careful, guys. Be careful, because even though the markets believe the Fed is bluffing, we have very high interest rates, and interest rates might go even higher, which is obviously no good news for higher multiple stocks and pre-earnings companies such as Palantir. I am only going to say that. Okay, CrowdStrike, right? Let me see. CRWD. Let me see. There you go. Goes up today 4.72% and closes the trading session at $114.59. So, clear downtrend. We aren't seeing a lot of downtrends as of now in the markets. This is a major downtrend below a decline in 200-day moving average, decline in 100-day moving average. Not a good looking chart. I mean, buyers have obviously stepped in over here. CrowdStrike is 32% of its lows, or off its low, which is a good sign. So we have buyers stepping in, and as of now, we have a critical resistance coming up for the stock of this company at $121, which happens to be a previous support back from early November. So we can see over here a previous support that now turned into a new resistance. If the bulls of CrowdStrike take out $120, then we have a gap to the upside that could be filled potentially up to $132. This is going to be, if this push to the upside happens to occur, this is going to be a very tough spot for the bulls of CrowdStrike, because we are talking about a declining 100-day moving average, $132. This is an interesting chart. I mean, it's not a good looking chart, but if CrowdStrike if the bulls happen to be able to take out $120 from $120 up to $132, and if this, higher multiple rally, or the Fed is bluffing rally, keeps on going on, then we could see this trade from $120 up to $132. We are talking about an 8% profit trade, nothing to sneeze at. RSI at 65 points, healthy from a technical standpoint. Let me take a look at the supply and demand of CRWD. Let me see over here. CrowdStrike. So what do we see? We have an ascending demand that is above the supply, and the supply is still below the average. So from a market structure standpoint, I think that this is a possible trade, guys. If the bulls can take out $120 and good volume and momentum as well. SPY, I already went over the SPY lens. I can do it over. No worries. Not a problem. Anytime, bro. Airbnb. I haven't taken a look at Airbnb in quite a while. What is Airbnb doing? Oh, $120. My goodness. Take a look at this. Jesus Christ. Last time I checked Airbnb, it was trading in the $90, guys. Oh, my God. So Airbnb has gone up as of now. How much? 42% year to date. Jesus Christ. Oh, my God. Yeah, the Fed gotta be bluffing, guys. Okay. We find Airbnb trading above the 100-day moving average, 200-day moving average. We almost made over here a brand new higher high. This is a good looking chart. RSI at 66 points. So watch out for $120, guys. Yeah, this is the next important spot for Airbnb. $120. It's a previous resistance, by the way, back from mid-October, and this is also a previous resistance back from early August. If the bulls can take out $120 on good volume and momentum, what do you know, guys? $128, baby. We're heading to the moon. This is a previous resistance back from mid-September. If we were able to take this trade, I am going to keep a close watch on Airbnb. So thank you very much for this suggestion. From $120, guys, up to $129. This would be an 8% profit trade. And they're about to post earnings, by the way, on the 14th. So the earnings are coming up. and I guess that we have a very high implied volatility. Let me take a look at that. So no, 50%, nothing crazy. They post earnings when is the date? On the 14. What's the expected move? Let me see. We have an $11 expected move into the earnings report. So this stock is going to be on the move most likely in the upcoming days and into the earnings report. RSI 66 points, looks good. And let me take a look. Supply and demand of Airbnb. Let me see Airbnb. Let me see. Okay. So buyers and sellers, take a look at this market structure, guys. An ascending demand that is way above the supply, and the supply is way below the average. Very, but very good looking market structure. I would say that unless we see a rug pull, a general rug pull in the markets, if the bulls start to believe that the Fed isn't bluffing, the stock of this company is very likely to take out $120 and fill this next gap up to $128. Very interesting. AI, there you go. We have the artificial intelligence optimism. Okay, AI. It went down today 10%. Because there was a news over here, guys. When it comes to AI, but I think that they went lower on the Microsoft news that they are going to invest in artificial intelligence or something like that. So in the case of C3AI, I kept a close watch on the stock of this company today, by the way. Full disclosure, I was interested in taking a trade over here. I am going to keep a close watch on support at $23.50. And why? Well, because $23.50 is a previous support back from early August. If the bulls can consolidate slightly above $23, this could be a sign that we might be about to see another short squeeze up to $31. If we were able to take this trade, and obviously, guys, this would be a very high risk trade. I would be placing a very tight stop loss. But guys, from $23 up to $30, what do you know? A 23% profit trade. The RSI went higher in a very significant way. It climbed up to 89 points. So the stock of this company got very overextended, very overbought. But as of now, and since the stock of this company dropped 10% today, we can see the RSI on the 4-hour chart at 52 points. So maybe if we cannot take this trade, what about C3AI breaking the support of $23? This could also be a short, guys, no problem. If this support is taken out on good volume, we could see C3AI dropping down to $20, which is a previous resistance back from mid-August. This would be a phenomenal short, guys. So watch out for $23.50. Meta, oh my bad. My friend OJ. Let's go ahead and take a look at Meta. Hey guys, by the way, when I'm done live streaming, the only favor that I am going to be asking for you, I am going to release this video in my YouTube channel. Please go ahead and drop a comment once the video is released. Like, hey, I don't know, whatever. You guys know. Thanks, bro. See you next Tuesday. Whatever you want, please help me out with the comments. Not here on the top chat, but rather once I have released the video openly in my YouTube channel. Please do me that favor. Okay, Meta, take a look, guys. This is some sort of a bull flag over here. Not a very academic bull flag, but it does look like a bull flag. It is not an academic bull flag, but it does look like a bull flag. So Meta is very overextended, guys. You have to be very careful. So it got too far away from home base. When I'm talking about home base, I'm talking about this declining 200-day moving average. So despite the fact that the RSI is at 69 points, it is not very elevated. I think that we are about to see a decent pullback in the case of Meta platforms. These very important moving averages, such as the 200-day moving average and the 100-day moving average, they act like a magnet. And take a look. As of now, Meta is trading 27% above this declining 200-day moving average. So we have not a beautiful, but we have some sort of a bull flag over here. If Meta happens to complete this bull flag, that would imply that the bulls are going to take out 194 bucks and that they are going to fill the next gap up to 204 bucks, which happens to be a previous resistance back from early June. I think this is going to be the highest that the stock of this company is going to go. So yes, this is a very interesting and very good looking short. However, we have a bull flag. We are above all the moving averages, but in my opinion, this is my opinion, I was talking about Tesla. Meta got too far away from home base, and I think that these two moving averages, both the declining 200-day moving average and the 100-day moving average, are going to act like a magnet. So I don't see a good risk reward here, guys, to be honest, to the upside. And I am not going to buy puts either over here. Let me take a look, by the way, at the market structure of Meta. Let's see what is going on in the case of Meta. Righty, there you go. So Meta, take a look at this. The demand is skyrocketing, guys. However, we can see that the supply is also ascending, and it is above the average. So sellers are going to outnumber buyers. Sellers are going to outnumber buyers, in my opinion, guys, sooner rather than later. Be careful. This could be a legit breakout trade up to 203 bucks, but be careful, because I think that the stock of this company has gone too far too fast, in my opinion. Okay, that's what I asked. Bro, I wasn't here for your words on SPY. Yeah, let me go over the SPY again. Not a problem. We are how many minutes in? Let me see. 31 minutes in. That's fine. Before I wrap it up. Okay, if you guys have any other suggestion, please drop me a comment over there down below. So we have a very big level coming up for the bulls, 418 bucks. If they happen to take this resistance out, and obviously we can make the case that we are going to see over here some sort of double top, not an academic double top, but a double top in a basic way, or let's say expressing a double top in a very basic way. So if they take out 418 bucks, what would be the final destination of this? The Fed is bluffing rally, maybe 431 bucks, a previous resistance back from mid-August. In my opinion, and obviously this has nothing to do with the charts, guys. So we have had a very poor earnings season so far. This is something that we have been able to let's say, check based on based on most of the earnings report that have been posted so far. I think that this rally, I would say that as of now, the bulls or the markets are pricing in a perfect scenario. So from a fundamental standpoint, I would say that this rally shouldn't be going much higher, but technicals say otherwise, guys, and we need to trade the charts that are in front of us. So from an earnings standpoint, even from a Federal Reserve standpoint, even though the bulls believe that the Fed is bluffing, I would say that we have an appointment with lower prices sooner rather than later. But when it comes to the charts, guys, as long as the bulls remain above 408 bucks, they are in total control of the SPY. And if they take out 418 bucks, yeah, why not? Maybe the final destination of this rally is going to be 432 bucks. And obviously, ever since this year started out, the most profitable strategy out there has been to buy dips, guys. So I am going to keep on doing that, and maybe another test of 408 bucks. And if that support happens to act once again as such, as a support, I am going to be buying a dip at 408 bucks. And for those that are interested in getting puts, 418 bucks. And mind you, guys, in my opinion, this is just my opinion. This is an advice that I would tell you. Don't try to guess the top. If you try to guess tops, you're going to be mistaken 9 out of 10 times. So in my case, I can easily buy puts when the trend is down. When the trend is up, I don't try to guess the top. And I buy puts whenever an important level of support is taken out on good volume. So you will not see me buying puts over here. I have puts I invest at a long term, so I have some short positions as a hedge, but I am not going to be trying to guess the top over here because the trend is up. So buyers are in control. The S&P 500 and the SPY, for that matter, is innocent until proven guilty. And I have made that mistake before, trying to guess stops, and it doesn't work out, guys. You are going to be mistaken 9 out of 10 times. So good luck trying to guess the top. And mind you, I believe that this market has gotten too expensive. I don't see a good risk reward to the upside, but I am going to wait until an important area of support is taken out by the bears and good volume. Let's say $408. If that were to happen, then I might be buying some puts over here. Powder girl for all your beauty products. Hi, hey, how are you? Okay, what do you think is the best strategy for trading Tesla? Let me go over Tesla. And mind you, guys, we have had yesterday. I haven't taken a look at the options market today. Yesterday we had a massive, what I mean, massive numbers of call options bugged with a strike price of $200, which is a dip that hasn't been filled quite yet. The bulls failed at $198 today pre-market. They also failed at $198 yesterday, and they also failed at $199 on February 3rd. So I'm thinking, and since the bulls have been able to hold $100 as support, that $200 is coming up. Maybe tomorrow, who knows, throughout this week. That $200 is, first of all, a fat number. Fat numbers are very important when it comes to acting as supports or acting as a resistance. But if $200 happens to be tested, I think that is going to be an interesting spot in order to short Tesla. In my opinion, I think that is going to be a massive area of overhead supply. We're going to see a massive profit taking at $200. However, as of now, you have to keep in mind that Tesla is still in a major downtrend. As you guys can see over here, we have a declining 200-day moving average. The bulls are holding the 100-day moving average, which also happens to be declining, but has acted as a good support recently. So from a technical standpoint, the stock of this company is still guilty until proven innocent. However, who knows? Maybe I'm mistaken. Maybe $200 is not such an important area of overhead resistance. If the bulls can't take out $200, maybe they could be potentially filling the next gap up to $215. I am not going to be a participant in the trade. $215 is a previous support back from mid-June. So I do believe that $200 are coming up, but I think that this is going to be, it might be a short opportunity, taking into account that Tesla is still in a major downtrend, because as I just told you, we have a decline in 200-day moving average. RSI at 68 points, and the 4-hour chart, nothing to complain about that. And when it comes to the market structure of TESI, what is going on over here? Let me see. Nothing to complain either over here, guys. We have an ascending demand, and we have an ascending supply as well, but that, as of now, is below the average. So yeah, $200. What do you guys are going to do if Tesla hits $200? Are you going to get some puts, or are you going to go long Tesla, taking out $200? I am not going to be a participant in that trade. NVDA. Before I wrap it up, guys, I don't want to go over 40 minutes because then I don't get any views for this live stream. So NVIDIA went up today 5.14% and closed the trading session at $221.73. Guys, I don't know when is NVIDIA posting earnings. I also believe that the stock of this company has gone too far too fast, and most of the earnings reports that we have gotten from the semiconductor companies have been poor and below estimates. NVIDIA is trading as of now pretty much priced into perfection, and if NVIDIA keeps on running, guys, and I never gamble on earnings, I might be thinking about getting some puts, obviously in the money and maybe expiring 2 or 3 months out. What a rally in the case of NVIDIA. The stock of the semiconductor manufacturer has gone up 61% year to date. Unbelievable. I think, and I just told you, the way that the moving averages act like a magnet. Take a look. So NVIDIA is, as of now, trading 40% above its 200-day moving average. This push to the upside is very overextended. These moving averages tend to act like a magnet. So I do see NVIDIA pulling back sooner rather than later, as I have been telling you. Maybe a pullback down to $206 could be a viable dip if support happens to be found near this area. $206 is a previous resistance back from late January. If we happen to buy the dip on NVIDIA at $207, and if it happens to bounce back up from $207 up to $220, this could be a 6% profit trade. This stock is very overextended. I'm not going to touch it here. I mean, obviously, buyers are in total control of the stock. But from what I see, guys, too far away from home base. So I do see more downside over here rather than upside. RSI at 68 points. Nothing to complain about that. And let me take a look at the market structure of NVIDIA. So what is the supply and demand looking like over here? Let me see. Why does Wall Street short Tesla so much? It is a heavily shorted stock because it is a very expensive stock. That's the reason why. I am a Tesla shareholder myself, guys. Tesla is an extremely expensive stock. Extremely. So most of the shorts base their shorts on the valuation of the company, which happens to be extremely rich. Tesla trades at, I haven't taken a look at the P ratio of Tesla. Let me see if I can see it here. What's the P on Tesla? Let me see. What's the P ratio of Tesla? Let me see. The P of Tesla is 53. This is a very expensive stock, guys. So the Tesla trades at 53 times earnings. It is a very expensive stock, and obviously we have a debate over here. Is it a car company? Is it a tech stock? In my opinion, Tesla is a tech stock, but keep in mind, guys, that the average P ratio of a tech stock or of a tech company is 25. Tesla trades twice the average P ratio of a tech company. So regardless of the fact, regardless of the fact, if Tesla is either a tech stock or a car manufacturer, it is a very expensive stock. So most of the short positions on Tesla are based pretty much on its valuation. Let me take a look at the market structure of NVIDIA before I wrap it up. So we have an ascending demand, and we have kind of an ascending supply, but that as of now is below the average. So what do you know, guys? NVIDIA from a market structure standpoint looks pretty compelling. So how high can NVIDIA go? Let me take a look over here, guys. So the next gap would be up to $230. 230, let me see, $230 is a previous resistance back from April of last year. So it could keep on going higher. I am not going to touch NVIDIA unless we see a pullback down to $208 approximately. Well, guys, I am going to wrap it up here. We are, let me see, 43 minutes in. So please remember, I am going to post this video in my YouTube channel because as of now I am live streaming exclusively for you guys. Go ahead and drop a comment over there. So that helps me out a lot when it comes to the YouTube algorithm. Thank you very much, and see you guys in the main chat. Take care. Enjoy the rest of your day. Take care, guys. Bye.